Welcome to Insurance Now, a podcast devoted to helping busy insurance agents stay up to date on our rapidly changing industry. With your host, Rebecca Gordon, crazy mother of four, second-generation co-owner of Gordon Marketing, one of the nation's largest FMO IMO offices. Rebecca has trained over 2,000 agents in her career and is an expert at helping agents grow their business. Rebecca Gordon, Insurance Now.
Hey everybody, welcome to Insurance Now with Rebecca Gordon. I'm your host, Rebecca Gordon. And it's Friday here in beautiful Noblesville, Indiana, so I wish you all a happy Friday. Now today it's pretty darn exciting here at Gordon Marketing because we have Kyle Dietz with Pivot Health, and we've had some tremendous energy from our little podcast commercial we did a couple weeks ago about their new bridge to Medicare. So we're going to talk about that, and I have two guests with me. I have German Hans. Say hello, Hans.
Grüß Gott von Deutschland.
Yeah. And we have Tennessee Ted.
Hey everybody, thank you for letting me be a part of this podcast today. Really honored.
Okay, so a little bit of an eclectic group here, but I'll tell you folks, my manager told me they're all smart. So the first thing I want you guys to do is, if you haven't jumped on our website, which is gordonmarketing.com, go to the top under the health tab. You will see short-term / bridge to Medicare. There on our site, that's where you're going to find all the information, producer guides and PowerPoints, all that good stuff. But really, we'll do a good job today so that you can be off and running. So, Kyle.
Yes.
What's
good morning.
up?
Good morning. Good morning.
Did you have a nice Christmas? Let's just warm up. Did you have a nice Christmas?
You know, we had a great Christmas. I've got a soon-to-be 4-year-old son who, for the first time, really got into Santa Claus and, you know, the carrots sprinkled over the deck with carrots, and it was very, very good. Do
you do the magic reindeer food?
That's the carrots that we...
Oh, your reindeer eat carrots.
Our reindeer eat carrots on the deck.
Vegetarians.
And I thought that he wasn't going to remember that we put them on the deck, but thank goodness that the reindeer did come and eat the carrots off the deck.
It's a big day. And then you have a daughter.
And I have a 2-year-old daughter, Rowan, So, and she doesn't quite really understand, but she likes to open her presents and get...
So awesome.
Yeah.
My kids are 18, 16, 13. And so what they do now is they just give me a list. And actually, because they're in this techie age, they send me the links.
Ooh.
The links with their sizes. It's I've told them I'm just going to give them all a credit card. Just be done with it. But we had a lot of fun. And they still love Santa gifts. And in fact, they asked me, I think one of my 13-year-old... was really serious because some of my siblings, they don't do Santa gifts anymore, right? And so my daughter's aware of this, as are my other kids, and they're like, Mom, do you promise Santa will always come?
They caught on.
Like, heck yeah.
I am 35 and I still get Santa gifts from my mother, and I wouldn't want it any other way.
I mean, heck yeah. What the heck? You think I'm gonna... Santa is real. Okay, so now we're warmed up, and it's Friday, thank goodness. Got a big game. If I have any Colts fans listening, actually, by the time this airs, hopefully the Colts would have won. But we should air this today, so our big game's tomorrow.
That's right.
So that's exciting. I hope we do well. Seems like we're on a roll. And don't for 1 minute think I'm a football fan, because I'm not, but I enjoy victories. Don't we all? German Hans.
Jawohl.
Jawohl. All right. So let's talk about the bridge to Medicare. So this is a plan by Pivot, and I always like to first understand the hierarchy. So who's paying the claims, who owns it, and what's the marketing name?
Yeah, no, that's great questions. So this product is underwritten by Companion Life, which is a Blue Cross Blue Shield of South Carolina owned company. It's an A+ rated company. And Pivot is the marketing name behind this product, right? So it's called the Bridge to Medicare Plan. And Pivot was responsible for creating the product, distributing the product, marketing the product. And then we utilize a third-party administrator called Allied National. They've been in the business a long, long time out of Kansas City. And they're the company that would process claims, handle customer service, do fulfillment, etc.
And then the marketing name is Pivot Health.
Pivot Health, correct.
Okay.
Yep.
So I've sprinkled this out, the bridge to Medicare. My marketers have sprinkled it out, and we have gotten a tremendous amount of hits on this. And Tennessee Ted and German Hans, you guys can chime in English, please. But why? What is the plan? What is it? And why did you create it?
Yeah, so there's a couple of reasons why. We saw a niche market of that 62 to 65-year-old individual that didn't have many options on the ACA front, or if they did, it was very, very expensive. So I'll start with the customer, and then I'll lend into why we created it for the agent community. So the customer is going to end up getting a 40 to 50% reduction in premium compared to an ACA plan. So that's really, really attractive on the customer side. On the agent side, obviously there's not as many options on the ACA front. And as we all are well aware, the compensation level and lifetime value of that plan or those plans have not been that strong. And so what we've done is created a product that is both a win for the customer because the pricing is so much less. And what we've done is created a product that's a win for the broker because they're able to save money to their customer and make a living off of selling the product as well.
I have always thought of this market as, and I'm probably going to offend a lot of people, like the crappy market. 62 to 65. Nobody in their right mind has ever liked this market, especially if you sold health insurance. They were too expensive. They were too sick. They were too this. But the most important, they weren't going to be on the books long enough for it to be worth your time. Hey, folks, we have a special guest star here. We've got my sister, Sylvia Gordon.
Woo!
And if
Shout
you
out!
need to make sure you're reading her blogs as well as our Wednesday wrap-ups. But, Sylvia, we're talking about that 62 to 65-year-old. What's your thought on it?
So the health insurance agent didn't want to waste time on them because he had such a small window to make any money, and he didn't care about Medicare. So the Medicare agent needs to get really excited about this because we've always hated those people too, because we take care of the spouse on Medicare and the spouse loves us. And they're like, what can you do for my wife? And we're like, I can give her like a $900 a month ACA plan, and they hate you. So they're like, well, I just won't do anything. And then she gets hurt, and then they hate you. Or you give them short term with all limitations, and they hate you. So it was easier for the Medicare agent to say, oh, I don't touch those people. So now we can do what we really want to do, which is really take care of our clients. I hate when people say holistically, but like we go out to the couple, we can take care of the man on Medicare. We can take care of his younger wife.
Trophy spouse.
Don't want to be sexist, but it's generally that way.
Trophy.
Did have a woman that had like a 20-year younger guy.
Holla.
It was-
Amen.
It was awesome because she was kind of chubby and just not that quite. And he was a jockey. So he weighed like 90 pounds. They were like so misfit.
I have an image.
They were super in love. They were like awesome. I love them. Anyway,
That's
one
nice.
time in my whole career have I had that. So this product is great for the Medicare agent because we want to take care of that spouse. We're tired of saying, I can't help you. And we're tired of selling them something that's going to make them mad.
You know, it almost seems to me we can almost start to say that Medicare starts at 62. I'll probably get in trouble.
Yeah.
But we're going to talk about how this goes right into Medicare seamlessly.
Exactly. And so just to touch base on what Sylvia brought up, that market is a couple of disclaimers there, right? If somebody qualifies for a subsidy, they really should explore ACA. That's more than likely the best route for them. If they've got major pre-existing conditions, this product is not going to be great for them. That's another customer that I would lend to ACA. But what we have found is over 12% of our entire customer base at Pivot Health is 60 plus. And so they're buying our short-term medical plans already without even the option to have a 3-year plan to bridge them to 65. So I think that's a huge win for us. I think the other component is the fact that about 75% of the customers that apply for us that are 60 plus are able to answer all of the medical questions no. And I think that's really valuable as well, because I think a lot of agents, a lot of customers out there would think, oh, well, I don't qualify for that plan, or everyone that I work with is sick, and that's not true. That's not true. As this population increases, and we have millions of Americans in that age bracket, and we've all heard the stats: 10,000 people turning 65 every day for the next 20 years. Well, 10,000 people are turning 62 every day and 63 every day, and this is the product for them.
Kyle, what was that percentage again of people who are going to qualify for this plan?
So our stats tell us that about 75% of the customers that are 60 plus answer all of the questions no.
Wow, that's fantastic. I've been in the business a while now, and I just never really noticed that, because you're absolutely right. You start thinking of that age group and you're thinking, well, that's an ACA client because they've already got pre-existing conditions. So that's already preconceived in my mind, but I'm a little floored by that 75% statistic. That's incredible. There's a market there.
You know what? Something else that's interesting, Kyle, is that you talk. I've heard you talk about this plan before, but you talk about this in Medicare terms. Can you go into that? You talk about like one part of it being Part A, another part being Part B. How is that plan truly structured?
Before we get to digging that onion, I just want to recap a little bit on the structure of the plan, just some of the basic stuff. So look, folks, one thing I want you to do right now is shoot me an email or a comment on my LinkedIn comment page. Tell I'm super high-techy. And ask for a copy of the brochure and application so you can see the 5 questions. But I just want to touch on those 5 questions. What I kind of like about this plan, because my history has always been under 65, is it's pushing and merging that agent that is still trying to stay alive in the under 65 market and bringing them to the over 65 market. And you're doing it nicely, because those 5 underwriting questions are the exact same underwriting questions we've had on every short term for the last 50 billion years. Have you ever been denied? Is your height and weight, 250 or 300 or below? Can't be pregnant. And then there's that one question we all know of that has like 50 subs. But basically, in a nutshell, this product is not for anybody who's sick. It's not for anybody with high-end conditions. It's not for anybody who's going to cost the insurance company a lot of money. So once you know who your client is, it is for those 62-year-olds who's playing tennis and golf, still working, watching out. And I joke about that group now, because as I'm aging, 47, they don't look near as bad as I thought they looked when I was 27. I'm like, well, heck. That'll be me before I know it. And I want to be just like Gwen in my Pilates class, who can plank for 5 minutes and kick my butt in tennis, and she's 63. So you're looking for your client, typically, if I was to profile, and hopefully this isn't, or it probably is. I'm on the edge here. But you're looking for probably a middle to upper income person, healthy, and makes money. Higher education. That's probably what you're looking for. Only person who's going to want this plan is somebody who has something to lose.
Exactly. You're going to protect your assets.
If they don't have any assets, this isn't your client.
Right.
If they rent and don't own, this isn't your client. It's somebody who has assets. They want to protect it in the event of that $100,000 claim. Mm-hmm. They may own their own business or be middle to upper management executive.
Agreed. And again, I think it's exactly for that person that is 62, and Sylvia mentioned it. It's a great for that spouse that is younger, that has 2 to 3 years before they're going to age in. But it's also for that early retiree, to your exact point, Rebecca, that person that has made a very good amount of money, and maybe they're just hanging on to their career because of the insurance benefits that they're getting from their employer. And this is a great product to say, You don't have to wait until 65 anymore to retire. You could actually retire at 62, and we've got a product for you to protect you until you reach that Medicare age.
So what's the earliest effective date?
62. So
I could have an effective date tomorrow?
Oh, yes, sorry.
Yeah.
Yes, you can have earliest effective date would be the day after you apply.
No more than 60 days.
No more than 60 days out on your effective date.
And it's
correct.
accept, reject underwriting.
It is accept or reject underwriting. There are 5 underwriting questions. All need to be answered no.
So this is where I bring my mom's scary voice and I say, don't get creative. Do you hear me? Do not get creative.
So why do I say that? I've recruited agents. I love this business for the last 22 years. And I love sales because salespeople are creative. And I love that. I hate the word no. I hate the thought that I'm stuck in a corner. And salespeople don't get stuck in a corner because they always find a creative way to get out, right? And that's what I love. Don't be creative with this product. Because even though it's accept, reject, and we're going to talk about how this segues beautifully into your Medicare client. And I love that idea that 10,000 people turn 65. Well, heck, 10,000 people turn 62. Don't get creative with underwriting. If your client says, well, to one of those questions, don't write them. You will never beat an insurance company. You will never be smarter than them because all short terms, they will investigate at time of claim. That is standard. That is nothing new. But I always like to throw out my little disclaimer, don't get creative. And I've talked to many agents in my time where they raise their voice a little bit like, well, I'm like, no. You will absolutely screw yourself. Don't even.
Yes.
So that's my
Yes.
Tennessee Ted, you hear me?
Absolutely. And I do have another question that kind of goes along with what you were talking about, Kyle. If I have, let's say, a husband and a wife, let's say husband 63, wife 62. In a couple years, that husband is going to age into Medicare. What happens to that spouse? Does she get kicked off because it's one applicant? How does that work?
Tennessee Ted, that's a great question. And no, what happens is the spouse then just becomes the primary, and she would be able to continue on to the plan until she ages into Medicare.
Okay.
And in fact, somebody that is, if you have a primary that is 63 and has a spouse that is 55, they can actually buy this plan. And that spouse would be able to keep it until the max duration, which is 3 years. Then they would have to find something else out when they, in this case, turned 58. Or they would be able to buy another short-term plan. And so
you have a husband who's 63, spouse is 58. The spouse can get on this plan as well.
Right, but they would be able to keep it only for the max duration, which would be 3 years, correct? Or 364 days times 3.
That's wonderful. Okay.
Wait a minute, that's above my mental power. Say that in smaller words.
So if you have a husband that is 63 and wants to buy the Bridge to Medicare plan.
And I'm 58.
And you're 58.
Okay.
You can also be on that plan with your spouse. However, when they age in, you will only be able to keep it to the max duration that we allow, which is what we consider 3 by 364. So there would be a gap between the age of the spouse and when they turn 65 that they would have to find some other means of insurance before they age into Medicare. They could
or they age into 62.
Or they age into 62 and then they can buy Bridge to Medicare, or they can buy another short-term plan.
So this can be rewritten on the same client so long as they can meet the underwriting qualifications.
You are correct, Tennessee Ted. Yes.
All right. Well, Indiana Rebecca still did not have her Wheaties today. I'm 58. My hottie husband is 63. So don't worry about him. Now he's 65. He's off the plan. And I'm 60. Am I on this plan?
You are on this plan for an additional year, because that would be the 3-year time frame.
Oh, 3 years max. But
3 years max.
Now,
correct.
Now, let me ask you this. Was the only way I got on this plan was because I had my hottie husband over 62?
Yes.
Understood.
The primary has to be...
Ding, ding,
exactly.
ding, ding.
Primary has to be 62.
All right, guys. If you are super outgoing like me and sometimes can't always follow simple concepts, that's what I tell myself. It makes me feel good. in the comments, definitely put that you want to go over that example again, because that took me a while. I want to make sure you guys get that, because that's cool. So I have to start over again. Let me ask you this. Do I get a new deductible every year? So and Kyle is shaking his head. So in radio talk, we call that a yes.
Yes. So I think this is a great time to go back to what German Hans' question was in terms of the benefit structure of the plan, right? And what we call it is Coverage A, which is a comprehensive short-term medical plan. It's built there for your unexpected medical conditions that could arise, right? So that's Coverage A. And then you have Coverage B, which is fixed benefit, first dollar coverage to protect you really when you need preventive care or doctor office visits or outpatient surgeries. This is the plan that actually pays your customer a lump sum of money per day or per occurrence to help offset the deductible and the comprehensive coverage that they get through the short term. So you have this Coverage A and you have this Coverage B, and they combine to create a package, one product called the Bridge to Medicare plan. And a couple of disclaimers here. Your customer will get billed twice because they are two separate plans. Even though they're one package, they are two separate plans. They are a short-term medical plan and they are a first dollar fixed indemnity plan. Now, to Rebecca's question, every year, every 364 days, the deductible and the max benefits are going to reset. This plan is also based on policy year, not calendar year. So just a disclaimer there.
Policy year. Yeah, so if
that way
it's effective March,
right,
from March to March.
March to March, exactly.
So you said that there's two plans with the, I love the A and B analogy. Medicare Part A, Medicare Part B analogy. Is my client going to get two cards? Or is it one card?
Great question, Tennessee Ted. They will get one card. So to the customer, it feels like one plan, other than those two charges that they'll get on their plan. But we have to keep it separate because they are truly two plans that are packaged together to create one. Mm-hmm. And then I'll also put my disclaimer out there that, again, we bring this up as the Bridge to Medicare plan, but just remember, folks, this is not Medicare. This is individual under 65 bridging them.
Can we call it almost Medicare? I mean, if the four of us feel like this is the new Medicare age, maybe we could start a movement.
We would love to start a movement on this.
I would like to emphasize here that when we talk about this product, we are talking about first dollar coverage, right? With that indemnity plan along with something else that's being offered, which is that network discount, right? And that's often forgotten.
So what we utilize, good question, German Hans. What we utilize is what we call reference-based pricing. And so there is no network attached to this plan. We call it the freedom of choice. So customers can ideally go to any doctor or hospital that they choose to utilize. And then what we do, what Pivot/Allied does, is we have a reimbursement rate with the provider that is 125% of Medicare and facilities at 150% of Medicare. So there is no network. And that's the other reason why when you look at the restrictions that ACA has caused, a lot of folks out there want to be able to see the doctors that they want, that they have been going to, and they don't want those network restrictions. So this is a great product for those individuals that want really freedom of choice to go to the doctor or hospital that they desire.
So can you give me an example? $1,000 bill.
Absolutely. Let's say an echocardiogram, okay, right? So an echocardiogram, a customer would be charged, say, $2,000, right, for the technician coming in and working with the customer or patient for 20 minutes, and then the cardiologist maybe reviewing for 5 minutes. That facility is going to bill $2,000. On a network plan, the network repricing, the motivation there may be, I get a 50% network discount. All right, so my $2,000 charge now becomes $1,000. For all the folks out there that do Medicare, you may realize that an echocardiogram does not cost $2,000. The Medicare reimbursement rate of an echocardiogram may be $200. So what we're doing is we're allowing the provider to earn above Medicare reimbursement, but we're also saving the customer a lot of money because they're not paying that $1,000, which again, they think is a great deal because they got a 50% network discount.
Right.
They're paying $200 plus 25. So Rebecca,
Don't
you
do
can
it. Don't do it. Don't
250.
do it.
You can do the
250.
math.
Don't do
The
it.
German Hans say 250.
So $250, right?
God. Don't
So $250.
Why? Because 25% of 200?
125 of 200 would be $250.
125. I knew that.
So now the customer, and it really depends, right? If the customer hasn't met their deductible, then the customer's bill is $250. And here's where a lot of folks get a little nervous about reference-based pricing is they come to me and they say, Kyle, what if my client gets that balanced bill, right? What if my client gets that $1,750 balance bill because the provider says the company's only reimbursing me $250, so I'm going to charge my client. Well, the great thing about Pivot and Allied's relationship is we have a no balance bill guarantee. So we guarantee that the customer will not have to pay a balance bill. That doesn't mean that the customer will not receive a balance bill from the provider. But what they need to do is then take that balance bill to Allied National, our plan administrator on it. And the plan administrator, Allied, will work with the provider to either negotiate that down or come to terms. And so the customer ideally will not see that balance bill. So that's a big win on the reference-based pricing side. The other win of why we utilize reference-based pricing over network is in the short-term medical environment, there's not many carriers that own their own network. So they lease a network. They call it a network access fee, right? There's big companies out there that say for an additional 15% of premium, we'll let you have access to our network. So then the customer has to decide, do I want to be able to go to any doctor that I want and not have to pay an additional 15%?
Well, the customer has no idea. They're just opening their mouth with a spoonful of goop and swallowing it.
Right.
Right?
Right. But we know as the marketer of this product that there is a network fee that's part of the premium that allows us access to a bigger carrier's network.
They're paying more.
They're paying more.
Hey guys, we are going to take a quick break and honor one of our sponsors. Wow, let's hear that again. Nice. Hey, I want to thank our sponsor, Aetna MedSup, for doing a fantastic job and being a great partner with Gordon Marketing. If you are brand new with Aetna, they have a fast start incentive, which will equal $500 cash. So what I want you to do, folks, is if this is something you're interested in, and we've written a lot of med subs with them, their product's really rocking and rolling, especially that Plan N. In the comments, put your name and number in there, and we will get back with you. But I want to thank them for their great partnership, and in 1 second, we will resume our show. And we're back on Insurance Now with Rebecca Gordon, your host, Rebecca Gordon. Kyle.
Yes.
That was a pretty smooth transition.
Hey, I'm shocked that we got sponsors. That is awesome.
We have sponsors.
sponsors.
I don't know that they know they are sponsors.
Are even sponsors, right?
I don't know. I'm going to send them a bill. Since Pivot doesn't do balance billing, that's kind of my balance billing. So, do you think that more carriers are going to go to reference-based pricing? Because I'm starting to see it. I see it with Altrua, which is a health share we
Altrua
use.
does it, right?
And I'll tell you, I didn't understand it. I
Yeah.
mean, I would just shake my head like, okay, say it again. And I know I sure as a heck don't think they knew it. But now that you guys are doing it, it's going to happen. So what do you think?
Yeah, no, you know what? Reference-based pricing is not a new concept. It's just been more prominent on an employer-sponsored plan. And I think this is a newer to the individual space. And I think as Medicare becomes more prominent, providers are going to be more open to accepting a reference-based pricing amount because they're filling their books with Medicare clients, and this allows them to earn a little bit more above Medicare. And I think, we've all seen the articles that have come out about big carriers and the last minute negotiations that they've had to create with hospital networks.
That is such a crock. I won't mention carriers, but that is the biggest theatrical crock when you get this email at, like, by God, we did it. We were able to bring him to the table and praise the Lord. It's like, it's so scripted. It's every single year.
Right. But, that, and we recognize that, but to a customer, they think, hallelujah.
Oh,
right?
hallelujah.
They made it and they got the deal done, and thank goodness.
What a great carrier.
Right. And so but they've been stressing about it before that when they got the letter that says, just so you know, I kind of equate it to what we've dealt with on the cable side of the house on TV, where you get this script that says, we couldn't come to negotiations with this cable network, and therefore you can't watch the Colts game, and now people are moving away from the cable environment. You can, as funny of an example as that is, you can do a little bit of comparison. And to answer your question, yes, I think there is going to be a movement to reference-based pricing. And I think we are very innovative on the individual side to do this. And I think we would love to continue educating our broker base and our customers on how reference-based pricing works and how it's a value add to their customer.
So, guys, I want you to be checking out our YouTube channel if you haven't subscribed already. It's free. Our channel is Gordon Marketing, Gordon, marketing spelled out, no space. And we are going to shoot videos on this with the dry erase board, meaning we will do math. Because I agree. I think this, it's funny. My dad's 83. We were driving home from the airport this week. And he was just going on and on about how crooked all of these EOBs are, and because he got a bill, right, for like $3,000, and then in the next line it shows the discount of $2,400, and then something else, and he's on the hook for $50. He's like, what the hell is this? Who is behind this? Like, this is just a convoluted conspiracy, and nobody complains about it. Because you, the consumer, think, oh, well, this is cool. But I would much prefer going to this model and knowing precisely than thinking how much extra have they been charging me to write this off,
right,
because the numbers don't make sense.
Right.
It is crazy. Tennessee Ted, do you have some?
Yeah.
Where's your accent?
Oh, me and Hans kind of got hit with that Indiana bug and lost our accents. One of the main things that I notice as a broker is when those clients hit about age 60 and up, those ACA premiums are through the roof. And so I know we got into the nitty gritty. Let's get down to the bare bones. What's our pricing like on a plan like this? And how does it compare to, say, an ACA Obamacare Marketplace plan without a subsidy, as you mentioned?
Yeah, well, that's a great question, Tennessee Ted. So really the average premium that we're trying to come in with this product is around that $500 to $600 range, mm-hmm, right? And
for both products, for both
A
products.
And B. Yes, exactly. For the short-term medical, which is probably in $350 to $450 range for this age bracket, and then you've got the fixed indemnity product that is going to be $100 to $150, right? So two components there, but you're talking about an ACA product that could be $800 to $1,200 per person, right? And so our goal in creating this was to come up with a plan that is roughly about 40% lower than the ACA
40%.
plan,
Mm-hmm.
right?
Okay.
With and I'll take that a step further, with a lifetime value or commission ability that is about 4x what an ACA plan could provide. And so one thing that we didn't get into early on, I got flustered when the infamous Sylvia Gordon came in, but we were talking about why this product is so attractive to agents, and it's purely, again, you're saving your customer money. But let's face it, the cost to obtain a Medicare client today is far more than it was 5 years ago, 10 years ago. And I think Gordon Marketing could speak to this more so than I can. But if I'm a Medicare agent out there, I'm looking at this product as something that helps me reduce my cost per acquisition of obtaining a Medicare client, because now I have somebody on my books that I have a relationship with, that I can bridge them into that Medicare plan when it's available. And I don't have to pay the premium to obtain that 64-and-a-half-year-old like I may have accustomed to doing in the past.
And you caught them at age 62. Let's face it, and we talked about it earlier. What agent wants to get a 62-year-old coming through their door right now? Nobody, right? So if you can be, and I don't want to exaggerate this term, but if you can be a hero to them, saying, hey, look, I'm going to save you 40%, they're breathing a sigh of fresh air. And let alone that, it's a great plan. It's that AB model that we talked about, right? If you can be a hero at age 62, how smooth is that transition when they do hit Medicare age, right?
Exactly. It is. And this plan will end. That's a great question. This plan will end on the first of the month that the customer turns 65. So it really should be that smooth transition right into Medicare eligibility.
Do they have to call and cancel?
They do not. It will automatically terminate on the first of the month that they turn 65. If their birthday is on the first of the month, it will terminate the month before, because that's when they become eligible for Medicare.
What states, German Hans, this is a quiz, is this plan currently available in?
It is available in 7 states: Alabama, Arkansas, Florida, Georgia, Kentucky, Ohio, Pennsylvania. It is pending in Texas and Tennessee.
Yeah, our next series of launches, we're really hoping to get this product in Texas, Tennessee, and Arizona. I don't have a time frame for when those will come up, and I can't commit to that. But we're looking forward to that happening hopefully in quarter one. And and for all of our Indiana folks out there, if you've sold short-term medical before, you recognize that there's a limitation on short-term medical that only allows your customers to have 6 months. And so just because you're in a state that doesn't offer 364 days, we have every intention of being creative with this product to give customers in a multitude of states the option to buy this. But just recognize in states that have that 6-month limitation, if we launch in there, it's going to be what we would call a 6x6. So every 6 months, the customer is going to get new ID cards, deductibles are going to reset, maximums are going to start over, but they will not have to requalify. And that's something we haven't talked about today. Is the really nice thing about this product is every year the customer does not have to requalify. They go through the underwriting questions one time at the time of the first application, and then what happens is they're just automatically renewed into the next plan. They get new ID cards, and their benefits reset after each duration. So
New ID cards, okay.
Kyle, what's your estimate of people today who are over the age of 65 who would be an eligible candidate for this? In other words, they don't have any other type of insurance.
Well, we know the stats say that there's about 77 million baby boomers living in the U.S. So that's 54 to 72. So we're talking a million plus market for this product, and it's only going to grow. The interesting thing about it is, we got a stat that said 45% of baby boomers consider themselves to be entrepreneurs. I mean, that's an incredible feat, and only about 50% have incomes that make them eligible for a subsidy. So when you put the math together, there are millions of people. Yeah. The market size of this product is truly in the millions. And as we explore more states and offer more opportunity to the agents out there, we're excited about that. This is such a new innovative product that we want feedback too from the agent base. So we want Gordon marketing agents to tell us, what do you like about it? What do you not like about it? What are some creative things that we could do to tweak the plan to make it better fit your customers? So we are very open to ideas and thoughts around how we can make this plan better as we grow our state footprint.
Wow.
Amen.
Wow. Nice finish.
Hallelujah.
Nice finish.
I know. Let's vote for Kyle. Open the government. So, Kyle, what else have we missed that we should ask?
I think we've covered a lot of ground. I don't think there's anything in addition to what I just ended with that I would say. Contact Gordon Marketing and get this product as part of your portfolio and start pitching it to your clients.
Yeah, so folks, go in the comments and request an agreement and information, and you can even request if you want German Hans or Tennessee Ted to call you back, because they will. But this has been a great product, and as we get questions from the field, and so we will do another podcast with Kyle to answer the questions, because there's no better way to learn a new product than taking people who are selling it or really thinking about it, and everybody's so creative and talented. And chances are, if one person has that question, there could be 5,000 other agents that have the exact same question. So we will do that as well. German Hans, Tennessee Ted, got anything else?
Ich bin fertig.
Ich bin fertig. Hey, everybody, have a great day. Thanks for listening to Insurance Now with Rebecca Gordon. Be sure to check out our blog, GordonMarketing.com. Have a great day and an awesome weekend. Go Colts!